Today, we're diving into a pivotal moment for U.S. monetary policy, one that has far reaching implications not just for the domestic economy, but for global financial stability as well. The Senate Banking Committee has cast its vote on the nomination of Kevin Warsh as chairman of the Federal Reserve, a decision that could significantly influence the direction of America's central bank in these challenging economic times. As a former Federal Reserve governor, Warsh is known for his hawkish stance on inflation and financial regulation, qualities that have sparked intense debate and partisan divides throughout the nomination process. The role of the Federal Reserve Chair is often understated in day-to-day conversations about the economy, yet it is profoundly influential. The individual in this position has the power to shape interest rates, influence inflation, and manage economic growth, all of which have direct and indirect impacts on the lives of everyday citizens around the world. Today, as inflation hovers above target levels and geopolitical tensions continue to strain global supply chains, the Fed's approach to monetary policy is more critical than ever. Kevin Warsh's nomination has not been without controversy. His past critiques of quantitative easing and his advocacy for stricter oversight of Wall Street have been met with both applause and skepticism. Proponents of Warsh argue that his experience during the 2008 financial crisis equips him with the necessary tools to tackle current inflation risks and ensure debt sustainability. They tout his intellectual rigor and his ability to navigate complex economic landscapes as significant assets at a time when the economy faces persistent pressures. On the flip side, critics are wary. They fear that Warsh's appointment could signal a shift toward higher interest rates, a move that might hinder growth during an already fragile economic recovery. This concern is not without merit, as raising interest rates prematurely could stifle borrowing and spending, two critical components of economic expansion. The outcome of the committee vote positions Warsh for a full Senate confirmation, an event that could reshape the Federal Reserve's board and consequently the future of U.S. economic policy by the end of the year. Understanding the significance of this nomination requires a look back at the recent history of the Federal Reserve. Ongoing vacancies and political gridlock have left the institution in search of fresh leadership. The debates over digital currencies, climate-related financial risks, and market vulnerabilities have only compounded the need for a strong, decisive figure at the helm. Warsh's prior role in advising on Treasury matters and his public advocacy for reforming central banking practices make him a noteworthy candidate for this critical leadership position. Yet, the implications of his potential confirmation extend far beyond the immediate confines of Washington. Should Warsh take the reins and advocate for normalized interest rates sooner than markets anticipate, we may see a strengthening of the U.S. dollar. While this could bolster the nation's leverage in international trade negotiations, it also risks heightened market volatility and challenges for emerging economies burdened with dollar-denominated debt. Domestically, such a move could spark robust debates over fiscal discipline, influencing issues from housing affordability to corporate investment strategies. This is not to say that Warsh's confirmation is a foregone conclusion. His nomination could still face rejection, which would prolong uncertainty and further politicize what is traditionally seen as an independent central bank. The stakes are high, and the outcome will undoubtedly shape policy debates and investor sentiment for years to come. In contrast to the weight of this nomination, other events today, such as the Supreme Court's examination of patent disputes in Hikma Pharmaceuticals versus Amarin Pharma and the U.S. Space Command's new headquarters, while significant in their own right, do not bear the immediate economic gravity of the potential shifts in monetary policy. As we draw our discussion to a close, it's clear that the nomination of Kevin Warsh as chairman of the Federal Reserve is much more than a routine political appointment. It stands as a critical juncture in the leadership of the world's largest economy, one that encapsulates the high stakes of guiding the nation through uncharted economic challenges. The ripples of this decision will extend far beyond the corridors of power in Washington, influencing global finance, economic policy, and investor confidence. It is a reminder of the interconnectedness of our world and the profound impact that decisions made in one part of the globe can have on the broader international community. As we continue to monitor the unfolding developments, the importance of informed, thoughtful leadership in navigating these complex times cannot be overstated.